Welcome back to episode 94 of the Deep Dive. I mean, the final full week of July 2026 has put the digital asset markets into this incredibly tight, high-stakes consolidation phase.
Yeah, it is a truly bizarre setup to witness right now, honestly.
It's like a classic tug of war.
Okay.
Okay, let's unpack this. If you look at the current market, it basically feels exactly like a tightly coiled spring.
It completely does. You have a market that is fundamentally trapped. Like Bitcoin is just glued to that $65,000 mark. But underneath that quiet surface, well, it's pinned between a brutal macroeconomic ceiling on one side and absolutely relentless Wall Street buying on the other.
Wait, let's look at that ceiling first, because if institutional demand is that high, I mean, why aren't we seeing new all-time highs? I know we've got traditional tech conglomerates pouring unbelievable amounts of money into AI data centers, but how does that actually drain liquidity away from crypto?
Well, because capital is finite, right? When mega-cap tech companies commit hundreds of billions to AI infrastructure, that money literally gets sucked out of the broader risk markets.
Oh, wow, so it creates a massive capital vacuum.
Exactly. It keeps global bond yields elevated. And then you add in the renewed geopolitical friction involving Iran, which, just pushed oil back above $90 a barrel.
Right, $90.
Yeah, and you naturally get this panicked flight to the safety of the US dollar.
So it is literally like running a marathon in a geopolitical weighted vest. Like, every time Bitcoin tries to sprint upward on positive ETF news, the sheer weight of $90 oil and climbing bond yields just drags it right back down to earth.
Yeah, but what's fascinating here is that despite that massive weight, the structural floor is holding firm. Like, U.S. spot Bitcoin ETFs just locked in an incredible 7-day inflow streak.
That's nearly $1 billion in net capital absorbed in a single week, right?
$1 billion, yeah. That buying pressure completely neutralized the mid-month sell-offs that were triggered by those macro headwinds. Wall Street is basically building an absolute fortress here.
Okay, but if institutions are buying up $1 billion while the price stays completely flat, I mean, someone else is anticipating a massive breakout. I'm looking at this staggering derivatives data right now, and
oh, the options market is going crazy.
right, options traders have built a $2.5 billion volatility wall, targeting a $72,000 Bitcoin strike price by the end of this month. They're clearly anticipating turbulence around the upcoming Fed rate decisions. So, what does this all actually mean for the altcoin landscape?
Well, looking at the broader landscape, altcoins took a 12% hit broadly. But beneath that surface-level stagnation, you have specific ecosystems outright defying the correction.
Like Solana, for example.
Yes, exactly. Solana is capturing massive real-world asset, or RWA, capital inflows. We're seeing MasterCard's stablecoin settlement architecture actively moving institutional capital on-chain there. And then, look at Hyperliquid.
We're holding a massive $14 billion market cap despite the slump.
Yeah, and that's because they aren't relying on pure speculation. They have a provable, recurring on-chain revenue model that distributes fees back to users. Real, sustainable cash flow is what retains users right now.
Which perfectly aligns with the technical shifts we're seeing. I mean, the Ethereum to Bitcoin trading pair just broke out of a multi-month descending parallel channel, hinting at a potential altcoin rotation.
Right, and the infrastructure for that rotation is being actively built as we speak.
Yeah, just look at Canada Crypto Week and the Blockchain Futures Conference in Toronto. I mean, thousands of founders gathered to push forward zero-knowledge scaling and Web3 AI.
They are upgrading the rails to handle an influx of global users, but we really have to anchor this builder momentum to the new regulatory reality.
You're talking about the U.S. Genius Act and Europe's MiCA, right?
Precisely. They are essentially forcing a unified global shift. By mandating 100% reserve-backed bank-grade compliance for enterprise stablecoins, governments are solidifying the entire foundation of the industry. The Wild West days are fading,
So to pull all of this together for you, as we wrap up episode 94, this horizontal price action we're seeing right now, it isn't boredom.
Not at all.
It is market architecture winding up for expansion. I mean, when institutional desks pour $1 billion into spot vehicles, while professional options desks stack billions in open interest around a 72K strike, they are positioning for expansion.
Absolutely. As we cross into August, the best thing you can do is keep your eyes firmly on the macro charts and the on-chain data. The foundation is solidifying right in front of us.
Yeah, I want to leave you with one final thought to mull over today. If Bitcoin is effortlessly swallowing $1 billion in ETF inflows, while simultaneously fighting off massive AI capital drains and soaring oil prices. What exactly happens to this tightly coiled spring the moment traditional tech finally slows down its AI spending spree?
That is the billion-dollar question.
Literally. Protect your private keys, keep your strategies systematic, and I'll see you in episode 95.